Joining us right now to talk about this and so much more, Geoff Lewis, Bedrock Capital founder and managing partner. But before we get to all of that, you were listening to the conversation we were having about Travis Kalanick and Uber, and it sounds like you have a take on all of this.
I think this is the beginning of an epic Sun Tzu Art of War battle, redemption for Travis.
Do you think he's coming back? You like the idea that this is not over?
Oh, it is. It has just begun, and he is doing the classic Sun Tzu playbook. Travis's new business, Cloud Kitchens, people aren't talking about it. It's not on the radar at all. It's not hyped, and that's by design. Travis is actually building a business that is focused on capturing the differentiated supply for Uber Eats, actually producing the food for Uber Eats, which is the fastest growing part of the Uber business. In their S1, right. Uber really called out the Uber Eats business as being a bright spot. It's about 22% of their bookings today, growing extremely fast. I think over 10 years, Travis could actually own the one differentiated value layer of the entire delivery space.
You're not buying into my more conspiratorial view that somehow Travis is going to come back to eventually run Uber.
Oh, he might do both. They're not mutually exclusive. But I think one thing you always want to do is you have an exceptionally talented entrepreneur who has a lot of vengeance. You always want to bet on that person. Vengeance is just a phenomenal motivator in business. I will invest in someone with tremendous vengeance any day of the week.
Okay, and just to be clear on what you're saying here is he realizes that Uber Eats is essentially this capital-burning tool for the kitchens to essentially make
Absolutely. Look at Domino's Pizza. It's $11 billion market cap. McDonald's, $125 billion market cap company. Cloud Kitchens could, 10 years from now be a bigger company than that, 3x the market cap of Uber. And he might also do this activist crazy thing.
Okay, but hold on.
Do both.
Let me ask you a separate question. You were an early investor in Lyft. Mm-hmm. How do you just even look at both of these companies, Uber and Lyft, right now?
Oh, well, I'm just thrilled with what Lyft's doing. I mean, Lyft, very different from Uber, has just stayed laser focused on their core rides business. In the U.S., they haven't done any of this international stuff other than a few test markets. They haven't done any of the food delivery stuff. Uber gave this huge narrative about taking over the world, taking over logistics, taking over food delivery. Lyft stayed focused. They're getting toward profitability and it's a better-run business.
Let's get Lyft stock up as well. You can't be thrilled about where things are. Do you still own the whole amount? Have you been selling?
I'm still a shareholder in the company. Again, I invested in 2012 at a sub $100 million valuation, so I'm quite happy with it. And that's why we at Bedrock focus on investing so early in these businesses. And it's unfortunate the public can't invest as early as we do as VCs.
So do you think things change in that regard? Well, let's just ask on valuations. Do you think the world's going to change at all in terms of how they perceive a Lyft or an Uber or, frankly, any of these unicorns, which is sort of how we began the segment?
Every one of these unicorns is somewhat unique. I will say that as a general rule, because there's just so much capital in this low interest rate environment in the private markets at the growth stage, we talked about SoftBank before, you've got lots of these huge global growth stage funds, the companies are very overvalued before they IPO. And so if I'm a retail investor, I would stay away as a general rule from, quite honestly, any technology IPO in 2020.
Would you advocate, I don't know if you saw Jay Clayton, who's the chairman of the SEC and the SEC more broadly, planning to try to make it easier for what are called non-accredited investors, so people without the typical net income or net worth, really, being allowed to get into these things. You think that's a good idea, a bad idea?
I think it's a great idea. I think the government telling people that they can't invest in a set of potentially highly lucrative investments is just wrong. I think we should completely get rid of the idea of an accredited investor, and people should be free to invest in whatever they want to invest in. I don't like the accredited investor thing at all.
It was so interesting to hear you say, it's going back to investing in someone who wants and feels vengeance. That's very interesting, because sitting right before you was Joanne Littman talking about the toxic masculinity at Uber that we heard so much about. And you highlight this whole, we sit here and we talk numbers and profitability, et cetera, but business is full of human nature and things that motivate people in very different ways. I'm just thinking, how do you square that with people say, oh, it was so terrible at Uber, and you're willing to go right back at it because that attitude is what drives innovation and profitability?
Well, you know, it's a very complicated, nuanced question. I will say that I think the toxic masculinity stuff, I don't have any insight into the inner workings at Uber, but more often than not, the stories are more nuanced than the headlines. And so I imagine that Travis has learned from the experience, and I do think just from a business standpoint, he is a extraordinarily talented human being with a lot of vengeance, and I think he's going to do very well over the next decade.
Okay. Do you think, by the way, do you think a lot of investors would get behind him?
Oh yeah, absolutely.
And there's no fund that would say, you know what, we didn't like how that other thing went.
I think it was more nuanced than someone like Joanne thinks, and I actually quite strongly disagree with the accusation that there's not a lot of introspection in the tech industry that she made. I think people are very introspective about these technologies right now and very introspective about cultures at these companies. It's a big topic.
I would bet if you run an ESG fund, you probably wouldn't.
Well, no, but what I was wondering is, but even beyond that, I was thinking of a big pension fund, big public pension fund that's involved with a venture capital fund, whether they would say, you know what, actually, we're not so happy about this. I don't look.
What exactly did he do that was toxic masculinity? That's what what is the toxic masculinity thing specifically? Can anyone at the table answer that?
The woman who left and she wrote the blog post, and
that wasn't about him specifically, though. It was about the broader culture.
No. But it was about a broader. Look, I'm not going to make the argument either way because I don't know enough about what was going on internally at that time.
Yeah.
But clearly, there was a view among not just employees but also regulators and the public that there was a culture problem at that company.
It was a toxic, horrible culture. I'm the first to admit that. It was having been on the board of Lyft, it was a very toxic culture. But I think people can change and grow, and I think he is a talented entrepreneur nonetheless.